So Tesla recently put out their earnings. Now, why am I talking about it with you? I'm not a Tesla bull. I'm not really a Tesla bear. I don't have any long or short positions on Tesla. I don't even have exposure to Tesla through index funds like the S&P 500 because I sold out of that back in December. I like Elon, but I'm not particularly obsessed with him. I'm a little bit impartial here, which is something that Tesla is seriously lacking on the YouTube space. It seems that no matter where you go, it's either Tesla is king and God and everything good with the world, or it's a total absolute fraud, and there isn't really much in between. But I am in between on Tesla, so maybe I'm the right person to talk about this. Maybe we get a good response from this video, maybe I just annoy everyone on both sides, so let's just wait and see. So the earning report itself, what was it and how was it? Well, here it is for anyone who wants to see. The important bit though are $18.7 billion in revenue, up against the estimates which were just under $18 billion. Automotive revenue, or money from selling cars, came in at just under $17 billion. The gross profit from that auto section is up to $5.5 billion. There were $3.22 a share of earnings, which was higher than the expected of $2.20. Automotive margins, basically the profit from making and selling these cars, is basically up to 32.9% now. There is regulatory credit revenue of $679 million, which is a huge amount, and the company, Tesla that is of course, got rid of almost all its company debt, which is nice if there is a potential recession coming. Earlier in the month, of course, we got Tesla's delivery numbers, and they had new highs reached then too, 310,000 or thereabouts for the first quarter of 2022. Now the numbers there are really crazy good, insanely good. That's about 80% growth year over year for the most part, which is even better than most bulls expected. The share price, of course, jumped on this news as you would expect. Currently, Tesla is sitting at about $1,030 a share pre-market. When this vid comes out though, the market should be open and it could be even higher. Now, what did Tesla have to say though? Well, the first quarter of 2022 was another record quarter for Tesla by several measures such as revenues, vehicle deliveries, operating profit, and an operating margin of over 19%. Our outstanding recourse debt has fallen below $0.1 billion at the end of Q1. Public interest in a sustainable future continues to rise, and we remain focused on growing as fast as is reasonably possible. Expansion of our production capacity is core to our decision making. In the past 2 months, we began deliveries of Model Y from Gigafactory Texas and Gigafactory Berlin. At the same time, we are putting significant efforts into the in-house cell production, raw material procurement, and supplier diversification. Challenges around supply chains have remained persistent, and our team has been navigating through them for over a year. In addition to chip shortages, recent COVID-19 outbreaks have been weighing on our supply chain and factory operations. Furthermore, prices of some raw materials have increased multiple-fold in recent months. The inflationary impact on our cost structure has contributed to adjustments in our product pricing, despite a continued focus on reducing our manufacturing costs where possible. Basically, Tesla is still growing, production is still growing, and so their sales are still growing too. Next quarter should be a strong one as the Berlin Gigafactory is going to open up and actually start having a major effect. I do believe it's already open, but it's only been open for a couple of weeks, so it hasn't really impacted the Q1 numbers. There are supply chain impacts and disruptions, which isn't ideal, but those impacts are fully expected, and Tesla certainly isn't the only company in the world seeing those disruptions. That being said though, Tesla has always dealt with these disruptions really well and far better than any other car company. I also believe that the Shanghai factory is actually back up and running again now after it was shut down due to that COVID outbreak in China. To be honest, I'm not too sure why Tesla sounds so concerned there. Maybe they're just using that as an excuse in case the future growth prospects or future earnings aren't so bright, but I kind of doubt that. Inflation is of course a factor, as it is for every company, but Tesla is one of the lucky ones who has been able to raise prices with inflation and not get left behind, so that isn't a major issue for them. Having hardly any debt is of course very nice too. The costs of capital are increasing right now more than ever, and a recession is possible even before 2023, but Tesla would be well defended against that inevitability. In general, Tesla are 100% clear that that was a strong earnings. They are right. There is no real fault there. As is the nature of Tesla though, people are always focusing on the future and about future growth, not what's happened in the past. And here is where some concerns are brought to mind. Tesla as a car maker is actually fully embedded in the market. It's here to stay. There is zero chance of it failing as a company like there was, 5 or 10 years ago even. Tesla in its other industries that it's trying to break out into is not as sure a thing though, and it's not a safe investment, at least to the same degree as the automotive side. Now the first big thing here is of course full self-driving or just self-driving in general. Tesla's technology is good, but it isn't actually leagues ahead of everyone else like it was in the past. Waymo and Mercedes, for example, are real-world competitors. Another major problem with self-driving that most Tesla bulls just tend to ignore is that the hardest thing isn't actually making self-driving good enough. The hardest thing is getting politicians to legalize it to be monetized so that it can go towards generating new revenue. Self-driving will without a doubt kill millions of jobs, and that is something that is absolutely terrifying to politicians in every single country in the world. On top of that, you have one death from self-driving, and that also gets politicized hugely, far more than any normal car accident might. And so it's just incredibly difficult to get the government on side to legalize self-driving so that Tesla can monetize it. And that, in my opinion, is the real problem with this, and something that most analysts don't try and bake into their predictions. In this area, actually, Tesla is very slightly behind a competitor, being Mercedes in Europe. It's the only company whose self-driving software is actually legally allowed in Germany, although it is in very limited circumstances, but Tesla doesn't meet those same requirements that Mercedes does over there. I do think that bulls tend to forget that no one doubts that if Tesla is able to get full self-driving to work and they're able to do it first and better than everyone else, then the stock price will quadruple from here on out, or however much up you want it to go, it will go that far up. The problem is that maybe Tesla aren't the first to get there, and maybe they're not the best to get there, and maybe they aren't the best at lobbying new politicians and things like that to get these new rules put into place so that they can monetize full self-driving to its fullest extent. As for car deliveries, Tesla is supply limited right now, which basically means that every car they can make, they can sell really easily, and this is the case now, but it won't always be the case. At some point in the future, Tesla will be demand limited like every other car manufacturer out there. The only question is when, and here is something that we just don't know for sure. EVs are still not produced enough to meet the demand required, so Tesla definitely has a couple more years to rein in the money like this for sure. What about if there's a recession though? Does that make expensive electric cars less appealing? What if oil prices hike? Does that counteract that thing? Maybe, who knows to be honest, but I do firmly believe that a recession is coming in the near future, probably in 2023 for the US, but possibly even before that, and that could derail these sort of plans. Now, regulatory credits have been a hot topic for Tesla investors for a long time, and I think it's pretty well understood that they are unsustainable, and they're also kind of a tax on internal combustion engine vehicles that has then been turned into a subsidy for electric vehicles. Now, to be clear, Tesla is smart for making as much as they can out of this. There is no reason to turn down what is literally free money, but this free money won't last forever, especially, in my opinion, if a recession comes, because as I said, regulatory credits are kind of a tax on normal car makers and thus a tax on people who buy cheap cars. Now, this revenue exploded last quarter and no one really knows why, but I suspect it's because it comes from contracts and maybe one big deal with a company like Stellantis can add $400 million in revenue or something like that. But this kind of huge revenue from regulatory credits cannot be counted on forever. The plus side of it is that at the moment, when it does come through, it is pretty much pure profit. Now, Tesla is going to continue to grow. That much is guaranteed, at least in my opinion. It's going to increase into the future, its production and its sales, probably still really quickly at about 80% year over year. That's definitely a reasonable guess. For how long it maintains this growth rate, though, is the real question in my opinion, and does it continue it long enough to justify Tesla's really high price? Now, if this growth is only maintained for 2 or 3 extra years, then the answer is probably no. If, on the other hand, it can maintain this growth for 15 years, then the answer is probably yes. As for Tesla's other parts of its business, the solar, the energy storage, insurance, robotics, and things like that, they're all still pretty underdeveloped, especially compared to the automotive side, and baking this into the price of Tesla is a really hard thing to do because it's mostly just valuing it on what Tesla tells you they're going to do, and obviously they're incentivized to embellish a little bit, as they have done in the past repeatedly with things like full self-driving and the Tesla Roadster, and now the Cybertruck as well. In my opinion, trying to speculate on these new industries that hardly even exist at the moment is too risky for most investors. This is more akin to something that should be done in venture capital. I mean, can any person on YouTube who just makes videos like I do say with authority how the energy storage market is going to look in 10 years? I seriously doubt that, because it will be so ridiculously different from today that the only people who really have any insight into where it's going are those actually working in that industry today, building it up from the ground. That's pretty much all I have to say about Tesla and their earnings today. Of course, it was a good one. The stock price went up, as you would expect. I'm going to quickly say, if you are polarized by Tesla, either you love them or you hate them, please recognize that Tesla is not the same company it was 5 years ago. It is not on the brink of bankruptcy. People not buying Tesla shares does not mean that your stock is going to go to zero because maybe Tesla won't be able to raise enough capital to meet their debt obligations. It is a fully developed auto manufacturer. It's practically a legacy car company at this point. Its name and its brand is more ingrained in American culture than something like GM, in my opinion. I really don't think it's too much to ask for you to just be a little bit sensible here. Don't get angry about Tesla, especially if you own a couple shares. It really isn't that big a deal. As always, we should try and strive to stay stoic. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that can help you protect your portfolio against inflation through fractional shares of art from world-famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets on the brink. It's completely free to sign up, so make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get over 7% interest on stablecoins to protect your hard-earned cash from being eaten away by inflation. Thank you all for watching. Stay stoic. Until next time.